The U.S. 30-year Treasury bond yield just hit 5%. What does that mean? Here's the cheat sheet. When the government borrows money, it pays you back with interest. The longer you lend, the higher the interest rate. Well, not anymore. Yields have been rising because the U.S. government is borrowing more than ever before. Investors are dumping American bonds, and Moody's even downgraded the U.S. credit rating recently. Basically, your credit score dropped, so the cost of your loans went up. And it's not just America. Bond yields across Europe, Japan, and other countries are rising, meaning governments everywhere are paying higher interest to borrow money. So here's how it hits you. Mortgages go up. A house just became harder to afford. Student loans get pricier. College debt is now a bigger burden. Businesses will borrow less, which could slow down job growth and pay raises. Stock markets will get shakier. But the good news is the US dollar often gets stronger. Economists warn that the yield curve is steepening, meaning investors are betting on more inflation and higher interest rates ahead. And here's the kicker. US deficits are ballooning. If Washington doesn't slow down spending, these 5% yields could become the new normal. The last time yields stayed this high for long was in the 1990s. Dot-com era, we all know what a wild ride that was. So what are smart investors doing? They're shifting into shorter-term bonds, less risky if rates rise again. They're exploring corporate bonds that offer higher returns than treasuries, and they're diversifying their portfolios with a mix of stocks, bonds, and even crypto for the brave ones. Why should Gen Z care? Well, every buy now, pay later app, every student loan, and even the cost of renting a flat is tied to these yields. When yields rise, borrowing gets more expensive. That means your dream Tesla or that trip to Bali on a credit card just got more expensive. The bond market may sound boring, but it's secretly the puppet master of the economy. If you want to stay ahead of the game, smash that subscribe button and follow for daily market insights, because the next big financial wave starts here.